today's Market SITEP from Top Gun Options. Matthew Buckley, call sign Whiz, the primary and weekly options model portfolio manager here at TGO. And hopefully everybody had a great day off yesterday, if you actually had Martin Luther King Day off yesterday. And hopefully you didn't watch the inauguration. It was one of the most divisive speeches, inaugural speeches in our nation's history. It's absolutely unbelievable. Essentially very dismissive of the 49.6% of Americans who did not vote for him. It's going to get ugly, folks. Essentially said, hey, we're not going to even look at entitlement and reform. Essentially, he confirmed that the United States will continue to be the biggest Ponzi scheme on the face of this planet. Placing more on the burden of our children. My 3 children, I look at them and I'm like, so you guys getting on board this program here, you're going to have to really work your tail off to support me and other people. I call it the Obama Happy Meal. Order whatever the hell you want and the person behind you is going to pay for it. So just an absolutely horrible speech and doesn't bode well for our country. So having said that, I'm going to trade the hell out of it. I at Top Gun Options, when the portfolios that I manage are doing exceptionally well. And why? Because I trade based on the stupidity of others. So with everything that's going on in Washington and how it impacts the market, I think it's great as an options trader, but I weep as an American. So what's going on today, folks? The market is catching a little bit of a cold. Why? Well, the existing home sales numbers came in lighter than expected. So for all the folks on Comedy Central and all these other, quote, 500-pound heads who say that housing's been powering our recovery and housing this and housing that, not necessarily the best news on existing home sales. Now, yeah, it was December and there's some seasonality into stuff like that, but I just don't know if housing is the rescue vehicle that a lot of people think it's going to be. The Richmond Fed Manufacturing Index, really bad. That couples with the Empire State Manufacturing Index up in New York last week or a week and a half ago, whenever it was, that was really horrible as well. So a lot of pockets in the United States reporting really bad news. Wednesday on the flight schedule, not too much. HPI numbers. Thursday, we obviously have weekly unemployment claims, some manufacturing. This one will be big. The Conference Board, their leading index of economic indicators, see how that's doing. And then not too much on the flight schedule Friday, new home sales. That'll give us a barometer of how home sales are doing. But the main thing that I'm looking at this week, earnings. Biggest 2 big gorillas have earnings this week, Google and Apple. And look at Google. Look at the implied volatility in Google leading up to earnings. It's double. Implied vol is double that of historical vol. And Apple is also reporting, I believe, after the close tomorrow. Again, nice increase in implied volatility there. We have a nice weekly options trade, 100-point wide weekly iron condor on Apple. So nice potential profit there. Good things going on in our model portfolio. Just did a nice 2-hour live trading session. We added a bunch of trades to the model portfolio. Very bullish long call diagonal on Morgan Stanley. Last week was financials week, folks. Goldman Sachs and Morgan Stanley printed money. Jamie Dimon got his bonus halved as the skipper of JP Morgan because of that London whale trade, right? Single trader or unit over there lost about $6 billion. Yeah, with a B. Bank of America, Citigroup, Wells Fargo, kind of the also haves, okay? So I really think the clear winners going forward, folks, Goldman Sachs obviously in first place, Morgan Stanley second, JP Morgan third, and we have a very bullish long call diagonal on Goldman Sachs in our primary trade alert portfolio, and we just put on a bullish long call diagonal on Morgan Stanley. I'll share that with you folks. We bought deep in the money, 10 deep in the money, Jan 15, $17 calls, right? And those are a little pricey. So what we do is our model portfolio, we turned around and sold 10 of the February 23 calls and brought in a credit. And we're going to do that month after month after month and eventually pay off these deep in the money calls and own them outright. We have several long call diagonals in our model portfolio on Brazil, trades up $1,800 after a couple months, and China. The trade is up $2,400 in about 2 or 3 months. Diagonals are great, and we have a lot of diagonals on gold as well. Long-term bullish on gold, very long-term bullish on gold. Why? Because the Fed is destroying our country by printing money out of thin air, essentially, and they're going to have to unwind that $3 trillion, soon to be $4 trillion balance sheet, right? Uncle Ben's decided to, instead of $40 billion a month, he's going to create $85 billion a month in air, green air, of buying mortgage-backed securities and treasuries to try and keep interest rates low. He's going to have to unwind his balance sheet someday, folks, and it's going to be very, very bad. Okay? So good stuff going on in the model portfolio, not good stuff going on in our country. Around the world, folks, we're really taking a hard look at what's happened in northern Africa with Mali and Algeria. Bibi Netanyahu is up for re-election here. I think 2013 is going to be an interesting year, folks. I think it's the year of Israel-Iran, and it's going to be the year of the Eurozone, whether or not that thing fixes itself or implodes. And it's going to be our year as well, too, folks, with this, the Republicans folding like a cheap suit over the debt ceiling and the fiscal cliff. We're going to see if they really are completely done as a party and as the opposition party, if they're not going to do anything around sequestration or the continuing resolution, because we haven't passed a budget in 3 years, folks, going on 4 years. Harry Reid is an absolute failure, and the man should be fired from his position as the United States Senator and the majority leader in the Senate. Just the guy's an absolute clown. So going to be an interesting year. Again, like I said, the model portfolios I manage do extremely well, mainly based on the stupidity of others, and you just can't make some of this stuff up. So from inception, on a notional $50,000 to $100,000 in haircut being employed, we're up about $171,000 since last March. So that's some pretty superior execution, folks. That's discipline and risk management combined, resulting in that superior execution. Okay, got to go. Have a nice live trading session this afternoon. We're trading the close and essentially talking about the trades I'm going to put on as a result of the upcoming sequestration and continuing resolution, also potentially the 3-month extensions, repeated extensions of the debt ceiling, and how that's going to impact the markets. Okay, so if you're not doing anything this afternoon, join us at 4 o'clock. Check your email for registration details. Happy hunting. Make sure you hedge, and I'll see you tomorrow.